Well, it's great to see that the government's finally moved on the stage 3 tax cuts, but Matt, I see negative gearing's back in the media. What the hell is negative gearing?
Well, I could explain it to you, Richard.
Well, come on.
But our chief economist did such a great job on Channel 10's The Project, so why don't we ask him?
Oh, too easy.
Break it down for me in 30 seconds.
Oh, 30 seconds to explain tax, that's always good. Basically, we're talking here, negative gearing is when you take out a loan to buy an investment property, you rent that out, but the rent that you get is less than the cost of repaying that loan. And so you're actually making a loss. The great news for you is that you can claim that loss to reduce your taxable income. So just by taking out investment property and actually losing money means that you can reduce the amount of tax you pay. And that's basically negative gearing.
So is it good or bad?
Oh, it's terrible. It's Australia's favourite tax fraud, really. That's what it is. The reason why it's bad is that it actually gives people an incentive to take out a loan to compete with people who are buying just for a house to live in, so that they're in fact competing with them to buy it, rent it out. And the only reason they're doing that is so they can reduce their taxable income. It is really a tax minimisation scheme disguised as a housing policy. Most of the benefits go to the wealthiest, and it massively distorts housing prices.
So negative gearing is a great way to help people with money, investors, to buy maybe their second or third house. But Matt, there's more to it than that. What's this capital gains tax discount that I hear so much about?
Yeah, so as we've just learned, negative gearing, you make a loss, right? So you're making a loss. That's not necessarily a good thing.
Sounds like a bad thing.
The payoff is the fact that the house has gone up in value. And when you sell it, you get paid.
So that's the capital gain, is the house price going up.
So the capital gains tax discount is basically a big tax concession, paying less tax on capital gains. So if you earn money from labour, from profit, from whatever source, you pay your marginal rate of tax. If you get money from a capital gain, then you pay half as much tax as you would from any other source.
Right, so if I earn $100,000 from going to work, or my company makes $100,000 in profit, we know what the tax rate is. But if you make your income from a capital gain, you only pay tax on 50% because of the 50% capital gains tax discount. So that's a sweet deal.
Exactly right. And so people wouldn't want to negatively gear as much unless there was this huge payout at the end.
Right.
And what it does is it encourages speculation in property. So you're not interested in how much how much rent you make, you're actually interested in the asset going up in price.
Right, so to be clear, negative gearing means you're making a loss on a property because you're spending more on interest than you're getting in rent, but those losses are tax deductible in the short term, so you pay a bit less income tax, but the real payoff comes at the end when you sell the house, rather than pay a lot of tax on the capital gain that the property made, the windfall gain from it going up in price. You get the 50% capital gains tax discount, which makes all that negative gearing, all those losses you made worthwhile.
And of course it means that we can push up house prices even further and it's still profitable to do so.
So Matt, we've had negative gearing for a while, and that was supposed to encourage investment in housing. And we've had the capital gains tax discount for a while, and that was supposed to encourage investment in housing. With all this encouraging going on, Australia should have lots of cheap housing, right?
You would have thought so, right? But unfortunately, most of the negative gearing and most of the capital gain, well, all of the capital gain, is on existing houses.
Ugh.
So negative gearing doesn't actually encourage that much property onto the market. And further, most of the changes that people are proposing would exclude new property. So you could still negatively gear new property.
So let me get this right. If I buy a house that's already there,
yep,
and I borrow money and I rent it out and I make a loss on a house that's already there, I get tax breaks.
Yep.
And then if the house that was already there when I bought it goes up in value, when I get a capital gain and I sell it, I get tax breaks.
Yep.
So the house that was already there, that can't have increased the supply of housing because it was already there, all those tax breaks for me on the house that was already there have done nothing to increase the supply of housing.
That's right, but they have attracted huge tax concessions.
Wow, and this hasn't worked.
And it hasn't worked, surprisingly.
So Matt, negative gearing and capital gains tax, I mean, that's tens of billions of dollars a year, but that's not all the government's doing. I've seen some announcements.
Yeah, so the government's currently trying to pass legislation to bring in an equity stake in the housing market. So the idea of this is that it helps people buy a house by the government taking a 30 or 40% stake in the house. So literally the government owns 30 or 40% of the house.
So it's a bit like the bank of mum and dad, but it's the bank of government.
The government, that's exactly right. And so it's cheaper for people to buy a house. They only have to, spend 70 or 60% of what they would normally need.
So the deposit would be smaller, the repayments would be smaller, but to be clear, they don't own 100% of the house. They've got a silent partner.
And if the house went up in value, then the government would gain from that. Their 30 or 40% stake would also go up.
Great. Okay, so we've got a new source of demand. Some people who can't afford to buy a house today can now enter the market. This all sounds good for the individual. Is this going to fix our housing crisis, Matt?
No. So firstly, it's only 40,000.
40,000 houses?
Secondly, all it does really is push up demand for housing and ultimately will make houses probably more expensive. But also it doesn't fix the underlying problem. So this is not going to make housing cheaper for everyone. A few people might be able to get a house that otherwise wouldn't be, but ultimately everybody will end up paying more.
So we're shuffling the order of who can win at the auction, but we're not actually going to get to the bottom of fixing housing supply or providing lots of houses to low-income earners in the outer suburbs who want to live somewhere near their work.
And unfortunately, that's what we've seen in housing policy over the last, several decades, is small policies that might do a little bit for certain groups of people, but ultimately just make housing less affordable.
It's like we do little things to cheer up lots of people while doing nothing to make the 1% of people that own a quarter of the rental property sad.
Yeah, it's funny that. It's almost like they have power.
Don't want to upset people with that much money, I suppose.
No. Now, Richard, before we get into what the government could actually do, let's tell everybody about our newsletter.
Every fortnight, we pull together all of our latest news, analysis, including our podcasts, opinion pieces, webinars, video explainers, and we send it all out to you to read at your leisure.
We also choose our win of the week and some commentary on analysis that deserves to go in the bin.
And you also get special behind-the-scenes updates from me.
Now, if you're interested in that, and you should be, you can check out the link in the description below.
Now, Matt, let's get back to fixing the housing crisis. Matt, are there any simple solutions for what a government could do with all of that money rather than give it as tax breaks for people that own existing houses?
Yeah, so we're talking about tens of billions of dollars
Per year?
per year. The government could, build houses.
Hang on, what?
Well, if we have a shortage of houses and we want a bigger supply of houses, and just hang on for a second, this might get technical.
Yeah.
But we could build houses.
New ones.
And
rent them to people.
And rent them or sell them to people.
Would this work?
Well, it would increase the supply of housing, it would make housing cheaper, and it would make rents cheaper.
Oh, wow, this is crazy talk. But has the government ever done anything like this before?
Yeah. Through most of the federal government's history, it was big particularly in the post-war period, post-World War II. It was massive into public housing.
Wow.
They built huge numbers of houses, and renting and housing was a lot cheaper.
And they could probably target the houses at the people who needed them most in the areas that needed housing the most.
Yeah, they have control over where the housing is built. They have control over who they rent it to.
Oh.
This could help the housing crisis.
Well, this is wild, but I tell you what, there's something very strange going on here because I think the government already knows how to do that. Because right now we have something called the Defence Housing Authority. Can you guess what it does, Matt?
Defence Housing Authority, does it provide housing?
Yeah.
To defence people?
And you know how it does it?
By building houses?
Buying land, building houses, renting them to people who work in the Defence Forces.
This is a brilliant idea.
Well,
does the government know the Defence Force is doing this?
Imagine if we took the Defence Housing Authority and took the word, let's amend the bill. Mm-hmm. Let's be really technical here. Let's introduce an amendment that removes the word defence from the Defence Housing Authority and just turn it into the Housing Authority.
And then it could just make houses for lots of different people.
Maybe nurses, maybe teachers, maybe people.
Radical.
Crazy stuff. So here we are in Australia, one of the richest countries in the world, at the richest point in world history, pretending we don't know how to or can't afford to solve a problem, when of course we do know how, other countries know how, we used to know how, we know how to solve it for defence personnel, but I don't know, maybe some more negative gearing will fix it?
Well, I mean, it sounds like we've got a choice. We can spend tens of billions of dollars on negative gearing and the capital gains tax discount, making housing more expensive, or we could spend tens of billions of dollars supplying new houses and making housing more affordable.
Oh, let's hope the Parliament gets to the bottom of this conundrum.
It's a wicked problem. So to summarise, we've got negative gearing and the capital gains tax discount pumping tens of billions of dollars in to make housing more expensive so that people who already own houses can have those houses go up in price. And surprise, surprise, the outcome is that just 1% of taxpayers own 25%, a quarter of all rental properties.
So 1% of Australians own a quarter of all the rental properties.
Correct.
So the system's working quite well.
If you're one of those 1%, it is great.
So if you wanted to hang on to things just the way they are, you would be desperate to hang on to negative gearing and capital gains tax.
And also, parliamentarians, high income earners, they tend to be more likely to negatively gear than the average Australian.
They do own a few properties,
They do own a few
politicians.
properties.
Yeah. So unfortunately, we've built a system that works very well for concentrating ownership in the hands of a small number of people, works very badly at making housing affordable for most people. So I guess it depends on what you think the housing market's for, whether it's a dismal failure or a complete success. But let's be clear, there's some pretty happy landlords out there at the moment.
Yep, making big capital gains. Thanks for watching. If you've got any questions, please leave them in the comments below. We always love questions and we always love answering them.
Oh, we love answering them.